Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD 10 presents. On Thursday, the EURUSD pair continued its upward movement, but made two rebounds from the 76% corrective level at 1.1454, suggesting a potential reversal in the favor of the US dollar and some decline toward the support zone at 1.1374-1380. A consolidation above 1454 would increase the likelihood of further growth toward the next Fibonacci correction level at 1.1574. The wave situation on the hourly chart remains clear. The last completed downward wave did not break the previous low, while the last upward wave broke the previous high. Thus, the trend remains bullish for now. Recent news about a possible increase in tariffs on steel and aluminium has once again forced the bearish to retreat. On the 4-hour chart, the pair rose toward the 127% Fibonacci corrective level at 1.1495. A rebound from this level would favor the US dollar, and some decline toward the 100 Fibonacci level at 1.1213. A consolidation above 1.1495 would increase the likelihood of continued growth toward the 161% Fibonacci level at 1.1851. No divergences are forming on any indicator. The trend channel still signals the continuation of the bullish trend. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. GBPUSD amid yesterday's brief optimism over the ECB's decision to cut rates and nearly complete the easing cycle, the pound almost reached the target level of 1.3635. Today began neutrally, apparently in anticipation of US employment data, but the Marlin oscillator looks weaker with each passing day. If the US data fails to boost the pound, the target level of 1.3834 will remain out of reach due to the approaching correction in the stock market. Here, the key level is support at 1.3633, which will be pierced tomorrow by the MACD indicator line. It's a blue line on a graphic. And if the price can break through this level, a medium-term decline could begin as early as next week. Despite such bearish signals, we maintain the pound's growth toward the target range of 1.3806-3834 as the main scenario. On the 4-hour chart, the price has been rising steadily along the MACD indicator line since May 29. This gradual upward movement creates conditions for a potential activation of bearish sentiment at the appropriate moment. The Marlin oscillator, developing with a range also warns of this. The market is tired. It needs a trigger. And today, it will get one. That's all for today. Wish you best of luck.